Imagine a space that doesn't exist. Not empty space, but a pocket of pure nothingness, engineered for a fraction of a second. This was Null-Space, the revolutionary backbone of hyperspeed computation and data storage in the 22nd century. It was faster, denser, and more efficient than anything that came before it. Corporations could process millennia of data in moments, all thanks to these fleeting, manufactured voids. But how do you own something that only exists for a nanosecond? Welcome to the wild world of the void brokerage. The idea was deceptively simple. The void brokerage didn't sell the voids themselves. That was impossible. Instead, they sold deeds to the rights to create and use these voids. They sliced up the computational ether into digital plots, turning temporary flickers of nothing into a new form of real estate. They called it void stating. Companies, investors, and even individuals rushed to buy these deeds. Owning a prime plot of Null-Space meant you controlled a piece of the fastest computational territory in human history. The value of these deeds skyrocketed. The market was booming, and everyone wanted a piece of the void. This wasn't just about speed, it was about prestige. Major corporations bought up vast tracts of Null-Space, not just for their operations, but as a status symbol. Banks began accepting Null-Space deeds as collateral for massive loans. Pension funds invested heavily, seeking to capitalize on the seemingly infinite growth of this new digital frontier. The void brokerage became one of the most powerful financial institutions on Earth. Its leaders, hailed as visionaries who had monetized the impossible, they had built an entire economy on a foundation of temporary nothingness, and for a while, it seemed utterly brilliant. The entire system hinged on one crucial assumption, that Null-Space, in its fleeting, temporary form, was the only game in town. The scarcity was engineered. The technology to create these voids was proprietary, held by a consortium of tech giants who licensed it through the brokerage. They controlled the supply, which meant they could control the price. Analysts published glowing reports, projecting a future where the value of Null-Space deeds would eclipse all other assets combined. It was the ultimate commodity, infinitely reproducible, yet artificially limited. What could possibly go wrong? Well, in a quiet research lab far from the frenzy of the trading floors, something did. A rival corporation, Omniquin, had been working on a different problem altogether. They weren't trying to make faster temporary voids. They were trying to make a stable, permanent one for years. They were dismissed. The physics was deemed impossible. Creating a stable, self-sustaining pocket of engineered vacuum without a colossal energy source was science fiction. But Omniquin, through a breakthrough in quantum entanglement, achieved it. They called it a quantum locus. The announcement was quiet at first, a simple press release that went largely unnoticed by the financial world. It detailed a new form of data storage infinitely dense, requiring near zero energy to maintain, and permanent. A quantum locus, once created, was forever. It didn't flicker in and out of existence. It just was. One locus could hold more data than all the Null-Space deeds combined, and it never degraded or disappeared. It was a fundamental paradigm shift, the equivalent of inventing the fusion reactor in the age of steam. The market didn't react for a full 12 hours. Traders were too busy celebrating another record high for Null-Space deeds. But then, the first domino fell. A small tech firm announced it was liquidating its Null-Space portfolio to invest in omniquins. New technology. The news caused a small dip, then a larger firm followed suit. Within an hour, the panic started. Suddenly, everyone realized the truth. Why would you pay a fortune for a temporary lease on a flickering void when you could own a permanent, infinite digital space for a fraction of the cost? The value of Null-Space didn't just drop. It evaporated. It went to zero in a single day. The foundation of the digital economy turned to dust. The deeds that were backing trillions of dollars in loans were now worthless pieces of digital paper. The entire concept of void steading became a joke overnight. It was an asset class built entirely on engineered scarcity. And a single technological leap had just made that scarcity obsolete. This was the collapse of the void brokerage. Banks that had accepted Null-Space deeds as collateral were instantly insolvent. Their digital vaults were filled with worthless assets. A cascade of failures began, ripping through the financial system. Corporations that had staked their futures on the value of their digital land went bankrupt. The global economy ground to a halt as the credit markets froze. The fallout was catastrophic, far worse than any traditional market crash in history. Because the asset that disappeared wasn't just overvalued, it had fundamentally ceased to have any value at all. The story of the void brokerage is a chilling lesson about our relationship with technology and value. It shows how quickly an entire economic system can crumble when it is built on a foundation of artificial limits. They weren't selling a real asset. They were selling a temporary advantage, a head start in a technological race. And in any race, there's always the risk that someone else will build a faster ship. The collapse reminds us that true, lasting value rarely comes from engineered scarcity. It comes from genuine innovation and utility. The void was never real estate. It was just a clever and ultimately fragile illusion. What do you think? Could a similar event happen today with our digital assets? Let me know in the comments below. Thanks for watching. And if you enjoyed this dive into speculative post-history, be sure to like and subscribe for more.